Here are 10 news stories from the world of cryptocurrency. Donald Trump holds over $1 million in Ethereum and receives NFT royalties. Silk Road Bitcoins worth $590 million transferred by the U.S. government to Coinbase are not necessarily going to be sold. Alabama lawmaker pushes for cryptocurrency and blockchain legislation next year. Investors return to buying Bitcoin and Ethereum. Why is Bitcoin stuck at $58,000? Bitcoin is on its way to $46,000. Whales are no longer buying BTC due to the death cross. Analysts forecast BlackRock will launch its own blockchain. In Malaysia, criminals kidnapped a Chinese citizen for a $1 million ransom in crypto assets. NFTs from the CryptoPunk collection will be featured at a Sotheby's auction. Circle integrates contactless payments in USDC on iPhone. First news. Donald Trump holds over $1 million in Ethereum and receives NFT royalties. Donald Trump owns between $1 million and $5 million in Ethereum and has significant income from non-fungible token (NFT) royalties, according to election disclosures. Although the exact amount of Ethereum is not specified in the documents, Arkham Intelligence estimates Trump's wallet assets at $3.6 million. In addition to holding Ethereum, the documents show that Trump earned $7.15 million in royalties from an agreement with NFT firm NFT Int, while former First Lady Melania Trump received $330,609 from the sale of NFTs. Data from OpenSea indicates that the trading volume of Trump digital trading cards has surpassed 15,808 ETH since their debut. In July, Trump announced plans to release another NFT collection. Recently, the Trump Organization, the holding company for former U.S. President Donald Trump's business ventures, announced the launch of a cryptocurrency initiative, according to CoinDesk. Second news. Silk Road Bitcoins worth $590 million transferred by the U.S. government to Coinbase are not necessarily going to be sold. The U.S. government transferred Bitcoins worth around $600 million to Coinbase, but this is unlikely to result in selling pressure. The U.S. government transferred 10,000 BTC worth over $593 million on August 15. According to analytics firm Arkham Intelligence, the Bitcoins were sent to a Coinbase Prime deposit wallet. Despite initial concerns, the Bitcoins are unlikely to be sold, according to Ryan Lee, chief analyst at BitGet Research. This doesn't mean that 10,000 Bitcoins have already been sold. Last month, the U.S. Marshals Service, an agency under the U.S. Department of Justice, announced a partnership with Coinbase Prime for the protection and trading of large digital assets, said Lee. Large Bitcoin holders can significantly influence Bitcoin prices. Investors often monitor the transactions of large holders to assess potential incoming selling pressure. The U.S. government's transfer could be for trading or safekeeping. The August agreement between Coinbase and the U.S. Department of Justice may signal an intention to trade cryptocurrencies with large market capitalizations, such as Bitcoin. However, the government may have simply transferred the assets for secure storage rather than active trading, Lee explained. After all, Coinbase is the primary custodian for U.S. ETFs, and there's a possibility that the U.S. government entrusted BTC to Coinbase for safe storage. Moreover, a sale worth nearly $600 million is unlikely, as it would have a strong impact on Bitcoin due to current market liquidity, Lee added. Based on current price dynamics, although there's a possibility of a market sale, it's unlikely. Where did the U.S. government get 10,000 BTC? The U.S. is currently the largest geopolitical holder of Bitcoins, as recently highlighted by presidential candidate Donald Trump. If elected, he promised not to sell any U.S. government crypto assets. The recently transferred 10,000 Bitcoins were initially seized during a raid on Silk Road in 2022, when the Department of Justice announced the seizure of 50,000 BTC from the darknet market. In early August, the U.S. government transferred Bitcoins worth $2 billion seized from Silk Road in the first significant blockchain movement of funds since their seizure. The Silk Road Marketplace, which has not been operational for over 10 years, allowed users to buy and sell illegal goods, including weapons, drugs, and stolen credit card data. Third news. Alabama lawmaker pushes for cryptocurrency and blockchain legislation next year. Alabama State Representative Mike Shaw announced plans to pass legislation regulating cryptocurrency and blockchain technology, as it increasingly becomes an integral part of the lives of Alabama citizens. This comes just a month after cryptocurrency stakeholders in Alabama, including lawmakers and businesses, met to discuss how to regulate the crypto market and blockchain technology for the benefit of all. In his Wednesday address to attendees at a Montgomery town hall meeting organized by Coinbase, a cryptocurrency exchange firm, Shaw said the planned legislation would be introduced next year. "I don't know what it will look like, but I plan to have something ready to present next year, though it will take some time," he said. "We need legislators and people to understand as much as possible about how the technology works, the implications for economic development, and what it could mean for our state." Currently, Alabama lawmakers have shown great interest in exploring how the state can benefit from blockchain technology and how it can be regulated. Last month, the Alabama legislature's Blockchain Study Commission held its first meeting to discuss upcoming regulations. During the meeting, Alabama Securities Commission Director Amanda Sen reported that several companies in the crypto industry have mushroomed, operating like banks and investment firms. However, these companies are not subject to the same regulations as those governing these companies. As a result, the Alabama Stock Exchange has been investigating cases of fraud, including cryptocurrency, for about 10 years. In addition, due to the lack of safeguards, there have been many concerns in Alabama about the potential for money laundering and the use of cryptocurrencies to finance terrorism in foreign countries. This has created opportunities for legislators, businesses, and other stakeholders to seek industry regulation as it continues to gain momentum. In other states, blockchain technology has already been implemented. Recently, California digitized its records of 42 million vehicle titles. However, most states have yet to adopt clear rules for cryptocurrency and instead rely on existing money transfer laws. Regarding cryptocurrency regulation, Shaw said it is crucial to have a little bit of a reset. "I think it would be an incentive for cryptocurrency and blockchain investment just to have a certain regulatory environment so they know what to expect here. A lot of crypto regulation is based on very old laws, case law, and things like that, and that's fine, but it's so new that sometimes they try to shoehorn it in. I think we probably need a little bit of a reset," Shaw said in an interview with Alabama Daily News. The town hall meeting took place at Prevail Coffee in Montgomery, owned by Wade Preston of the Alabama Blockchain Alliance. He not only participated in last month's Blockchain Study Commission but also recently began accepting cryptocurrency as payment at his coffee shop. Preston and Ashley Gunn, senior managers at Coinbase, unequivocally advocated for creating a regulatory environment primarily for cryptocurrency, though they also warned against overregulation of the sector. Meanwhile, legislator Philip Ensler, also a guest speaker at the event, agreed that overregulation of the cryptocurrency sector could stifle investment and innovation. "We don't want to stifle small businesses, we don't want to get in the way of investors or people who want to use this for economic development purposes," he said. Fourth news. Investors return to buying Bitcoin and Ethereum. On August 12, a major trading session resulted in Bitcoin funds recording inflows of $27.9 million. However, BTC is not the only cryptocurrency whose funds receive significant funding. Ethereum also joined in. During the same trading session, over $5 million was invested in its ETF. At the same time, clients withdrew tokens worth $2.3 billion from the fund. Analysts note that this is, in principle, the first time that the Grayscale Ethereum Trust managed to complete a trading session with zero outflows. Experts are also paying attention to the Fear and Greed Index. At the time of writing, it stands at 31 out of 100. This means that the digital currency market is in a state of fear. Which cryptocurrencies will rise after the market turns around? In addition to all of the above, there is also news from the U.S. Securities and Exchange Commission. The regulator sent a request to Andreessen Horowitz and Union Square Ventures regarding their investments in the Uniswap trading platform. How will this market sentiment affect the growth of large and small cryptocurrencies? Experts say that assets are already in the recovery stage. For example, in the last week, Bitcoin has risen in price by 7.1%. Now, according to CoinMarketCap, it can be purchased for $58.8 thousand. The second largest coin, Ethereum, is also gradually appreciating. Over 7 days, the asset's price has increased by 7.43% and reached $2.6 thousand. Analysts also remind that major cryptocurrencies are usually followed by altcoins. At the same time, they paid special attention to memecoins. These assets can show significant growth in a short period, thanks to community support and meme virality. One such promising project is Pepe Unchained. This startup stands out among other assets in this segment due to its own blockchain and profitable staking. Pepe is in high demand among investors. This is evidenced by the amount of funds invested during the pre-sale, $8.4 million. The pre-sale consists of 50 stages, with the asset's price increasing by 2% at each stage. Currently, the token is at stage 32 and is trading at $0.00900539. Analysts believe that the new asset can outperform many promising cryptocurrencies due to its characteristics. First, it operates within its own network called Pepe Chain. According to the developers, this blockchain has high performance and conducts transactions 100 times faster than Ethereum. Second, the memecoin provides access to staking. This means that all Pepe holders can lock their purchased coins to ultimately increase their passive income. The APY is also quite high. The approximate reward size is 230%. However, to receive such a reward, investors should hurry. This figure decreases as the pre-sale progresses. The official Pepe Unchained website reports that the Layer 2 solution will be launched on the blockchain upon the completion of the ICO. The final cost of Pepe before listings will be $0.00972884. Old and new cryptocurrencies can come out of a slight stagnation caused by the market downturn in early August. Investors are already showing increased interest in flagship coins like Bitcoin and Ethereum. Smaller but promising assets will follow them. Moreover, analysts expect that by September-October, the market could experience a bull run. This means that BTC has every chance of reaching a new all-time high. This positive outcome will also affect altcoins. Therefore, experts predict that coins like Pepe Unchained could see 100-fold or greater growth. Fifth news. Why is Bitcoin stuck at $58,000? Bitcoin's price has fluctuated between $57,815 and $61,815 for nearly 7 days, with the 50-day simple moving average at $61,662 providing consistent resistance. Currently, the price of Bitcoin is $58,200, which is 0.2% less than an hour ago and 0.6% less than yesterday. BTC's value today is 5.2% lower than it was 7 days ago. Additionally, in the past 24 hours, 57,708 traders were liquidated for a total of $221.55 million. The highest single liquidation order was on Binance, cust for $10.83 million. According to Glassnode data, recent Bitcoin price volatility may be partially explained by weak spot demand. Glassnode calculated the current net balance of buying and selling on the Bitcoin spot market by analyzing the cumulative volume delta to see if there was any bias. Glassnode data shows that in the network since Bitcoin's all-time high price was set in March, the market has faced a prolonged period of supply distribution involving wallets of all sizes. In the past few weeks, this trend is showing the first signs of reversal, especially for the largest wallets, often associated with ETFs. These large wallets appear to be returning to accumulation mode. According to Glassnode, spot market demand will resume once the adjusted CDD metric crosses the zero line and enters positive territory. If this happens, BTC could break out of consolidation, overcome the supplier cluster zone from $70,000 to $72,000, and move on to price discovery. A key Bitcoin indicator is causing new concerns among crypto traders, while a bearish cross suggests that the asset may be destined for further decline, although history shows that this could be a good sign. In an August 15 X post, Crypto Trader Mags wrote, "Bitcoin just printed a bearish cross on the daily chart." Mags mentioned the negative signal known as the death cross, which occurs when BTC's 50-day simple moving average falls below the 200-day SMA. Mags noted that this move indicates short-term market weakness. Traders use this crossover to compare Bitcoin's recent strength to its overall performance. IG market analyst Tony Sycamore said, "It needs to reclaim the 200-day moving average at $62,432 to stabilize and open up a test of trend channel resistance around $70,000. 6th News. Bitcoin is on its way to $46,000. Whales are no longer buying BTC due to the death cross. Bitcoin's price has found itself in an unstable position as large players, known as whales, have stopped buying the cryptocurrency. The halt in whale purchases has raised concerns about Bitcoin's future value, especially considering that technical models indicate a bearish trend. Historically, such tendencies have been associated with prolonged declines or periods of consolidation. According to LucanChain, institutions are refusing to buy Bitcoin. This coincided with a drop in BTC's value in the last 24 hours. The figure fell by 4.5%. According to CoinGecko, at the time of writing, the cryptocurrency is trading at $58,380. The decline in Bitcoin's price below $60,000 likely affected the interest of large investors in BTC. Institutions seem to have temporarily stopped buying Bitcoin, and that's why BTC's price dropped by 4.5% today. 2 days ago, we noticed that institutions are no longer receiving USDT from the Tether treasury, nor are they transferring it to exchanges, LucanChain analysts noted. Additionally, there has been a decrease in stablecoin deposits in the Tether treasury. After the deep crypto market dip last week, over 1.3 billion USDT was withdrawn to exchanges. This indicates reduced buying pressure and a more cautious approach from investors. Amid concerns, trader Peter Brandt stated that the trend has reversed from bullish to bearish. On the weekly chart between the 8 and 19 simple moving averages, the expert detected a death cross. The death cross is not the most reliable indicator of future price. However, it suggests the beginning of a downtrend. ARK Invest researcher David Puel spoke about critical support levels for Bitcoin in case of a price correction. The most important Bitcoin support levels are at $52,000 and $46,000, with the latter being confirmed by the average on-chain value, the red line on the chart, he explained. The situation with Bitcoin currently looks somewhat uncertain. However, it will become clear in the coming weeks whether BTC can stabilize or if the cryptocurrency's price will continue to decline. 7th News. Analysts forecast BlackRock will launch its own blockchain. Experts from Token Terminal believe that investment firm BlackRock will create its own blockchain and will operate in the same manner as Coinbase. According to analysts, this will allow BlackRock to consolidate accounting across all asset classes in a single, global ledger. In addition, Token Terminal studied the company's cryptocurrency strategy. According to their data, the firm divides the class of crypto assets into 3 different groups: cryptocurrencies, excluding stablecoins, and tokenized assets. Analysts also stated that the firm sees 3 unique advantages of Bitcoin as an asset, namely global accessibility, cross-border payments, transaction efficiency, limited supply. According to Token Terminal, BlackRock believes that blockchain technology can improve capital markets by increasing transparency and accessibility for investors while reducing fees. 8th News. In Malaysia, criminals kidnapped a Chinese citizen for a $1 million ransom in crypto assets. In Malaysia, police arrested and charged 6 suspects in the kidnapping of a Chinese national for a $1 million ransom in crypto assets. A bail hearing for the suspects was held on August 15, 2024. All 6 pleaded not guilty. However, the judge remanded them in custody, setting the next hearing for October 8, 2024. According to the case materials, the crime was committed on July 11 in the area of the highway exit between Kuala Lumpur and Putrajaya. On July 15, the victim and a woman who was with him were released. The victim's brother paid $1.1 million in Bitcoin as a ransom. Police believe the group responsible for the kidnapping included 18 people. 4 of them died in a shootout with the police. Law enforcement is searching for 4 more suspects who they believe are still in the country. The detainees face 30 to 40 years in prison, as well as caning. Notably, one of the suspects is the victim's driver. 9th news. NFTs from the CryptoPunk collection will be featured at a Sotheby's auction. NFTs from the CryptoPunk Sotheby's auction will run from August 15 to 23. According to representatives of the auction house, the lots presented will once again highlight the interaction between artistic expression and technological novelty. In addition to traditional artworks, the auction will feature lots related to generative art, as well as works by emerging artists who strive to push boundaries with new technologies. This auction marks a significant event in history, as Sotheby's brings together top-quality works from renowned series, exceptional collections of individual authors, and rare pieces that have been barely available on the open market, according to the auction house's statement. Among the lots declared by Sotheby's are NFTs from the popular CryptoPunk collection and a digital work by artist Michael Winkelmann, known by the pseudonym Beeple. The auction house had previously put up for sale the non-fungible token CryptoPunk number 7523 in 2021. At that time, the NFT's owner received a substantial $11.8 million for their asset. Beeple's work titled Every Days, The First 5,000 Days was sold for a record $69.3 million. 10th news. Circle integrates contactless payments in USDC on iPhone. Circle's CEO announced that soon it will be possible to pay in USDC using an iPhone, urging wallet developers to start their engines. He made the announcement after it was revealed that Apple allowed third-party access to the iPhone's payment chip for processing transactions outside of Apple Pay and Apple Wallet. Apple stated that developers will be able to use contactless transactions in-app for in-store payments, public transport, loyalty cards, event tickets, ID cards, and more. Based on incoming information, Apple will open access to the iPhone's NFC chip to third-party developers in the new version of iOS 18.1. Contactless payments will be available in several countries, including Canada, Australia, Japan, the UK, and the USA. Apple and Circle promised that the list of countries would expand. An interesting detail: to integrate the new solution, developers must sign a commercial agreement with Apple and pay a corresponding fee. However, the size of the commission is not yet known. It's worth noting that Apple's decision is not random but rather a response to the European Union's requirements. The new Digital Services Act introduces new rules for major tech companies, requiring them to open their ecosystems to third-party developers.